The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hello and welcome to the COB. I'm Juliette Sarli.
And I am Tessa Arcelia, joining Jules today.
Yeah, and you've joined us on not a great day, Tessa.
I know.
Did you break the market?
It's a sea of red.
Yes.
It is, as in all sectors down today.
Yeah, indeed. I think a lot of Fed anxiety. You've got that 2-year yield around 5%, a lot of kind of repositioning in global markets. It was a terrible April as well for US equity markets. You can see where the CBO 200 is finishing out the day down 0.9%. The ASX 200 had a bit of a steeper fall than that, actually, down by 1.1%, 85 points, 7,579 points. And as you say, Tessa, every sector in the red, quite significant selling coming through in gold as well. So just getting to that repositioning story.
No, absolutely. And I think, as we know, this is all about waiting for the FOMC meeting tonight and waiting for just, where inflation is headed. And what I find really interesting is now the rate cut expectations are coming in. And it's just surprising. When we heard today, well, I know we'll talk about it a little later, but we heard today the hikes projection. And here we go again. So I think Rabobank said 25 basis points twice in the year.
Yeah,
Is
and
it
I
August and November?
think
so
it was interesting talking to Deanna Messina just there as well from AMP because she mentioned as well, that fly in the studio, she mentioned that, they see a 30% chance now of a cut. They were the ones calling for a cut in June, both her and Shane Oliver. Anyway, let's get to the three themes of the day because, of course, we are talking about the old adage, sell in May. Has it started already? We had a 1% drop for the first day of May, but of course also came after that repositioning that we saw in April. And then, a fair bit of Qantas turbulence. Are you a frequent flyer user?
Yeah, and I actually didn't know about the turn off your app or sign out of the app.
They suggested
today.
that,
The suggestion of doing that. So there were investigations into whether there was a breach of privacy and what happened there. I think they've resolved the issue now, but that did send the stock price down today.
It's down on a down day, I guess, as well. But the other interesting piece is that, Qantas doesn't really have any competition. Even, Bonza has now collapsed, not that was listed, but where do investors that want to buy into this travel recovery theme go? Well, they go to Qantas, and there's still a buy when you look at Refinitiv data. In fact, the target price, $7.28, which is a 25% upside from where Qantas has been tracking. So even though, as we say, it hit this turbulence, still longer term, it's probably not going to be like the Optus data
well, what
breach.
Else do you
yeah,
buy
what else do you buy in that space?
Airlines,
and we mentioned Fed in focus, of course, all eyes on the Fed. We'll talk about that with our guest as well in a moment. Let's have a quick look at some of the sectors that we saw, kicking it off with some of these uranium players. No, we're going to start with the gold players. The gold stocks there, 3.3% lower. Newmont is not trading on our screen, which I think might be an error because I just saw it down by something like 5%. Let me just have a look. It is down 2.4% in fact, so came off some of those earlier losses. Evolution down by about 4%. Northern Star under pressure as well.
This is all bracing for the Fed meeting,
Absolutely. Here we go. Going nuclear. Look at those uranium stocks. We're going to talk about that with our guest in a moment too.
That obviously linked to the news of potential Biden administration potentially, we don't know yet if it's a done deal, blocking some Russian shipments. Of course, that worries investors, and it is changing. Well, people are buying now, just hoarding uranium at the moment. Yeah,
indeed, all going higher except NextGen. Quick look at energy. Of course, most of those under pressure. Woodside down 2.5%, Santos down by about 2%. The Paladin and Boss story is really more about that uranium theme, and then having a look at the corporate stories, of course, Qantas shares we just touched on. Reports of this app data breach, but Qantas did say it has since been resolved.
Yes, and we were also talking about Woolworths today, and they had agreed to sell some stake in Endeavour Group today, and basically they said they're not selling the rest of it. I think they still have about 4%, but this means that the cash that they'll be getting from this sale, they'll be giving back to investors. And I saw an analyst, Philip Kimber from E&P Capital, saying that's about $1.5 billion that they will return to shareholders. That's 1.25 per share.
All right, Amcor increasing its full year 24 earnings per share after releasing third quarter numbers. Its shares up by about 4%. And worth noting, Restaurant Brands in a halt, but it did release its first quarter sales coming in $333 million, up by about 8% year on year. All right, let's get to our guest and welcome to the COB, Mark Gardner from MPC Markets.
Good afternoon.
Hi.
How are you going?
Good afternoon. So this potential US ban on Russian imports, I mean, as we said, going nuclear, these uranium stocks.
Yeah, absolutely, because Cameco last night, which is the world's largest producer, had an absolute shocking earnings report, basically. So the uranium stocks were essentially, I think the ETF in the US was down about 3% overnight. Obviously, this announcement, it's just passed the Senate. I think it's going to go into, and they basically think it's a foregone conclusion in the House. So essentially, you can see there, the top left-hand corner, the US is the largest importer of uranium in the world, and that's their 2022 figures, but it's not much change these days. And their largest, their largest market they buy off is the Russians, about 25%. So there will be some, some flexibility in terms of if you've got current contracts. I think it will roll out to maybe 2028 or something like that. However, you've got a sulfuric acid shortage, which has pushed production numbers down for the two biggest producers in the world, Cameco and Kazatomprom, by about 30 to 40%. So, they provide about 45% of the world's supply. So they're not producing. And then we've obviously just had Boss and Paladin just hit first production, first drums shipped for Boss the other day. Paladin's had first production in, I think, about 3 weeks ago. So, look, these uranium, it's just fantastic timing. It's a fair bit of luck involved as well, but we saw spot prices head up for uranium overnight, back above $90. But as I said, the US market was shut by the time this was announced, so I would expect them to go to head a lot higher tonight.
Yeah, well, assuming that this will go ahead, as you say, it seems like the market is considering it as a done deal. Will this, given the supply of uranium is on the way up, is it going to structurally change the market with this Russian ban? Or is this just temporary blip?
We were already in supply deficit. We were already in shortage. So what it's going to do is effectively add to that shortage. So they've got 90 nuclear power plants they need, and you can't just switch a nuclear power plant off. So India's currently in the process of building another 18 odd plants. China's building them. Australia's the only backward country in the world that doesn't like nuclear power. Realistically, it's the only way we're going to get baseload electricity at a reliable level while we transition into renewables. So, I really can't see that thematic changing at all. So I would expect those, like I said, it's been a 2-year road back to production for Paladin and Boss, and all these announcements have come all at the right time.
Are they the best picks, or are you?
Well, they're in production, so yeah. I mean, look. You take the risk with the explorers that they find, because uranium, one small little nugget of uranium is like a metric ton of coal in terms of energy. So supply gaps can be solved fairly quickly, and obviously, as they say, the solution to higher prices is higher prices. People will start scrambling to get into the space, but or Kazatomprom and Cameco will start to, they'll have to source some more sulfuric acid, which could also be pretty good for the likes of Incitec Pivot, which produces sulfuric acid. So it's needed for refining in copper and particularly in copper and uranium. So they can't really refine it without.
And where do you stand? I want to move on to rates expectations, because of course that is the big thing that we're all looking out for tonight. So where do you stand? I think the market's pricing in one cut in the year now, down from 6 in January as far as the Fed goes. Where do you stand on that, and then how does it translate to Australia?
So the reason we're pricing in one cut still is because the analysts are embarrassed and they're just unwinding their basically because they can't just switch in a heartbeat, even though the sentiment's switched. So there won't be a rate cut this year. Categorically, swaps markets are priced out of the market completely early first quarter, maybe next year. But they're also, there's outliers now saying that there could be hikes. Yeah. So it's been a very, very swift change, I've got to say. For mine, 3.8% unemployment. They're expecting another 230,000 jobs to be added, which will be nearly 1.5 million jobs for the US to be added this year. Never in history have we ever even considered cutting rates with those sorts of numbers. So it's just not going to happen. Whatever the analysts say, there would have to be a catastrophic event or a black swan event for there to be considering rate
To
cuts
be fair,
this
not
year.
just the analysts though. I mean, Powell pivoted himself in November. So as we've discussed before, whether or not he has mud on his face or not, but what do you think he says at this meeting?
I probably think they jawbone rate hikes so they don't actually have to hike.
Yeah.
It would be the smart move from my perspective. I mean, I'm not a central banker, but but if they leave it, if they don't talk tough on inflation and markets, and people keep spending money, then he doesn't sort of scare people into a little bit of consumption submission. They may actually have to hike. So I think what central banks would rather is to just stay higher for longer and then go into a cut probably early next year. But their mandates to fight inflation and to and the states is they've obviously got an employment mandate as well. But unemployment rates are like record lows. It's in the high threes.
But to that point, you were saying that the change was quite abrupt. But should we even have been talking about cuts in the first place? Because we're nowhere, like in Australia, we're nowhere near the target. So it's pretty obvious that we were going down that path a little too quickly.
Yeah, we never considered that there would be cuts. I mean, the data. Look, they were predicting 7 cuts in like November, December. There was literally not enough time for the data to be enough data to be released for those cuts to even materialise. It was really the strangest thing I've seen. But it seems that analysts these days have got cut brain or hike brain, but there's no in between because that's not interesting. I don't really know, but the reality is there's always been 520 odd, 510 odd days between and that puts it at around about, you guessed it, December this year, January next year. So, which is about where the expectations from the real market and the swaps is sort of putting it. So, it you can't really fight those. Like the market wants things to move so fast, and in reality, the economy just moves. It's so much slower than what market expectations. And we've got this really bad habit, particularly in the last, I think, since the late. Or around 2020, in the last 3 or 4 years particularly, we just get ahead of ourselves continually, and then it gets corrected, and then it eventually ends up going to that place. But we seem to not want to sit in the middle anymore. It's not. I guess it doesn't. No one reads the analyst reports if it's not an extreme view, I suppose.
Yeah, well, indeed, some of these big calls, people you think are just trying to make a name. Let's talk more about the market though, because we talked about the uranium players, but down more than 1% today. Sell in May has come?
That's the average for it's day one.
Yeah.
May is a 50-50, whether it's up or down. Generally, it's our worst statistical month for the ASX 200. I would say really the banks are at fairly elevated prices. Obviously, BHP's, will be diluting if it's an all-script offer for Anglo American. That consumer discretionary and real estate part of the market, if we get a hawkish Fed tonight, I mean, they're cooked, really.
Yeah.
I mean, Wesfarmers in the mid-60s and the likes of Lavisa and things, I mean, there is significant downside for those guys. And the retail sales numbers are slowing here in Australia as well.
Yeah.
So there is wiggle room for downside, but I think if you basically... If you're taking great profits here in some of those names and go back to a little bit of cash and just we regularly do shopping lists for our clients, and you pick a name and you pick a level and actually embrace being able to buy into some high quality stocks at cheap prices, whereas particularly the last 6 months you've had to really roll the dice and take a risk buying at high PEs, etc. Potentially with the changing rate environment as well, because one thing we've got to remember is that the S&P on average drops 20% after the first rate cut. If you take black swans out, it drops about 12.5% on average for the last 40 years. So rate cuts aren't all they're cracked up to be. It usually means economic slowing. So yeah, I think if you just be smart, have your risk management plan, plan out what you want to buy on the dip, because I think you could set yourself up for the next couple of years. But I don't think this is the area where you want to be pushing it and crossing your fingers and toes and hoping for further upside.
All right, Mark, always a pleasure. Thank you.
Thank you so
new
much.
Regular Wednesday guest as well, Mark Gardner from MPC Markets. All right, well, the stock of the day today was Woolworths.
Surprise, surprise.
Yeah.
All right, Ben Clark from TMS Capital and Henry Jennings from Markets Today shared their take on the call.
results tomorrow. Hardly going to shoot the lights out. I don't think it's buy of the decade, as Andrew said, but it's it's probably a nibble here. It's a quality company, long term, but at the moment the headwinds in consumer land well and truly against it, I suspect. So for me at the moment, it's just a hold.
Go Woolies over Coles, I think. Although I would say, Coles numbers recently were stronger than Woolies, but I think Woolworths has got a bit more optionality in some of the things that it's doing outside of supermarkets, and it's been well, despite the negative press Brad has got. I think he's actually been a really good operator, and you sort of think about when he took it over, he's done a great turnaround job.
All right.
All right, Andrew, rather getting the final word there. Let's have a look at the market leaders on a down day, and really these uranium players, as we've touched on, Paladin, Boss. Amcor as well, it had its quarterly update. Life 360 looking okay, and Nickel Industries up 2%.
And on the other end of the spectrum, the laggards, Coronado Resources, and also resource companies down today. Ramelius and Perseus Mining all down.
Yeah, a lot of those gold stocks. Let's have a look at the small end of town. Actually a little bit of buying in some of these resource players like Anson and Aspire Mining, Turaco Gold, Botanics Pharma doing okay, and Alligator Energy up 7.6%.
And on the other end of the smalls market, selling Gallon Lithium, Step 1, Electro-Optic Systems, Southern Cross Gold, I think that I'm familiar with, and Queensland Pacific. Actually, if I'm looking at the sectors, energy, I think, is the biggest loser for today, down almost 2% on the ASX.
Yeah, all right, let's have a look at what is happening overnight. Of course, the Fed, Jerome Powell speaking as well. We'll bring you all of that tomorrow morning. But the US job openings too, the ISM manufacturing PMI, crude oil inventories, and then a big session of earnings as well. So you've got the likes of Apple, Shopify, Novo Nordisk will be interesting on the back of Eli Lilly, which did really well. Cloudflare, Coinbase, Global, and Amgen.
And expectations for Apple is pretty flat, I think, because of their low sales. And so we'll see. I think they're just looking for some good news from Apple overnight. And tomorrow, we're expecting trade balance in Australia, building approvals. And Japan's been in the news a lot. I don't think we'll learn a lot of new things from the minutes of the meeting, but it is there. And we have NAB earnings and a few quarterlies, West Farmer Strategy Day, and AGM for Rio.
Yep, so also Woolworths and Insignia, they're coming through with quarterly reports as well. All right, it is a down day. We have sold in May. I know it's day one, but we love a thematic in markets.
We do.
Down by about 1%, I think. There we go. The CBO 200 off 0.9%. And just looking at where the ASX 200 has finished, 1.1% lower, 85.3 points, 7,578 points.
So let's see what tomorrow brings, Jules.
Yeah,
will the May trend continue?
I'm going to guess a little bit of Jay Powell it will bring, and all those other things we told you about as well. We will see you from 9:40 Eastern.
Thanks for joining.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.